We're going to have a discussion today about cryptocurrencies or digital assets, Bitcoin in particular. Bitcoin, of course, has been in the news a lot lately, and the prices have been moving around quite a bit. I want to take this time to provide an update on this space, as well as talk about some of the advancements that are occurring within digital assets and Bitcoin in particular. To help me discuss this topic today, Ezra is joining me. Ezra leads our marketing and communications efforts at Vector. Ezra's background is in media productions and public relations. Ezra also studies Bitcoin and cryptocurrencies broadly.
Hey, thanks for having me on your show. Longtime editor, first-time guest. My interest in Bitcoin goes back 4 or 5 years. I think the intersections of communication networks and financial networks are really interesting, as is just broadly, the blockchain, talking about issues around custody and regulation of this emerging asset class.
Yeah, great to have you, Ezra. And before we get into some of the topics here, let's do a quick primer on Bitcoin to kind of talk at a high level about Bitcoin and cryptocurrencies again before we get into the weeds here. Some compare Bitcoin to a digital gold or a digital real estate due to its inherent properties. It lives on a network of computers that are distributed across the world, similar to the internet, and it's accessible anywhere with an internet connection. There's a limited supply of Bitcoin at 21 million Bitcoins, which is an important aspect. We're going to get into this in a little while here on why that's an important piece. The network is secured by what are called miners. Miners are effectively can be thought of as a group of computers also spread across the globe that are constantly validating transactions in this transparent way. Okay, Ezra, let's start with a simple question. You're walking down the street and someone comes up to you and asks you about Bitcoin. They ask you, why is Bitcoin worth anything? What's your response?
So one of the reasons that Bitcoin is worth anything at all is the network effect. And we can think about cell phones in this way, and that is to say that one cell phone is not worth very much, but a whole network of cell phones allows for interoperability and calling each other and really a confidence in that. Now, the other part of it about Bitcoin is its money-like properties, and I'll list them here: the durability, portability, divisibility, uniformity, that it has a limited supply, and its acceptability. So those properties are important and exist within Bitcoin.
All right, now let's talk about the network, the Bitcoin network. Okay, how is this network maintained and who owns the network?
Right, great question. So no one owns Bitcoin or owns the network. There are various network participants, and Bitcoin should be noted that it's an open source protocol, meaning anyone can download and use the software that runs Bitcoin. It operates as a peer-to-peer network, kind of like email or the internet.
Okay, that's great. Now that all makes sense. How is the network secured?
Bitcoin uses proof of work as its consensus mechanism, and that it does two things with this. One, it distributes new Bitcoin into the world in a fair and without intermediaries sort of a way. And number two, it makes sure that all those transactions are getting processed and commits them to the blockchain.
I want to spend some time talking about that because I've seen charts where it states that there are roughly 250,000 Bitcoin transactions that are settling or occurring every day. What is meant by that?
Right. So the settlement of transactions is recorded publicly on a blockchain. This is a singular or linear history of events and transactions. So Bitcoin miners using specialized computers compete to add transactions to blocks. Once those blocks are added to the blockchain, the miners earn Bitcoin, both sort of released from its issuance schedule, as well as the transaction fees contained by the transactions in that block.
I mentioned before that Bitcoin has a supply cap of 21 million. That's the most it'll ever be in circulation. Talk about why that's important.
So as we know about money, a limited supply is an important part of scarcity and helps to give Bitcoin value. As far as the issuance of new Bitcoin, we only really have 2.2 million left to go. That's to say that there's 18.7 million Bitcoin that have already been mined in the last 12 or so years. We won't see that last Bitcoin mined until 2140. We know this because it's programmed into Bitcoin's source code.
Okay, so what you're saying, just to recap then, is that the vast majority, 18.7 million of the Bitcoin that will ever be mined is already in circulation now.
That's exactly right.
All right, now let's talk fractions. And I'm gonna throw a word out, Satoshi. What is a Satoshi?
So each Bitcoin is divisible into 100 million units. Each unit is called a Satoshi. The important takeaway here is that Bitcoin is divisible and that holders don't need to buy, sell, or exchange whole Bitcoins, rather they can do it into fractions.
Now we're going to talk about layers. And Bitcoin is what is known as a base layer technology. And on top of that layer are other layers known as for example, the Lightning Network. That's a layer 2 technology. And a good analogy, I think, it was kind of a loose analogy, but one analogy to compare, the Lightning Network is to Bitcoin, kind of like how a Visa debit card is to cash in your bank account. Fair to say?
Yeah, that's right. So Bitcoin scales similarly to the current financial system.
All right, now Ezra, you mentioned scaling of transactions a moment ago. I think this would be a good time to get into a discussion on Bitcoin as a medium of exchange. Now, on September 7th of this year, the sovereign country of El Salvador will be adopting Bitcoin as legalized tender alongside the US dollar. What does this mean for El Salvador?
Right, so citizens will be able to make payments in Bitcoin as well as settle any debts. And I think the context is important here is that El Salvadorians, some 70% are unbanked. That is that they don't have a bank account. Now, on the flip side, 20% of their GDP is coming from remittances. That is, relatives working abroad and sending money back home. So there's friction here and a real gap that can be fixed.
Yes, I want to hit on that 20% number again, because we're talking 20% of their economy, their GDP, is based on remittances or money that's being sent back to El Salvador from abroad. That's a big number. How does Bitcoin fix this?
Yeah, I'd like to think about cell phones, actually. It might be a good spot to start. And that is, when cell phones were brought into developing countries, they leapfrogged over the need to lay copper landlines. So Bitcoin is kind of similar in this way in that it's an open source monetary banking network that can be built upon.
How is Bitcoin working on the ground in El Salvador?
So a small business owner in El Salvador, let's say that she sells coffee and pupusas on the beach. She can show a QR code as essentially an invoice for those items sold to a customer. That customer uses his or her Bitcoin Lightning Wallet app to make that transaction. Transaction is settled instantly. And what's I think also interesting to note here is that nobody really has to hold Bitcoin for any longer than they want to. It can be instantly converted into US dollars. Let's say that the vendor needs to pay certain expenses. She needs to pay for flour and coffee beans. So she has those fixed costs and they can be paid in dollars or in Bitcoin. She doesn't have to hold Bitcoin.
Got it. So I want to call out a couple of things in there you said, because I think that's really worth highlighting. Number one is that using the Bitcoin rails, right, merchants and individuals and institutions can effectively transact with each other for near zero cost, right? It's instant settlement. That's a worthy point. The other thing too, you compare what's occurring with this Bitcoin network or these Bitcoin rails is that, compared to the current financial system. So let's just say, if I go to El Salvador and I purchase a cup of coffee, right, there's likely going to be transaction fees, foreign transaction fees, and Visa is going to probably take their cut on all transactions. So you compare those two, and it's quite a big difference, right? We have one that's the newer system using the rails of Bitcoin that allows people to transact for near zero cost, right? That's a big difference.
Yeah, it's a huge game changer, I think. Certainly thinking about the Visa credit card transaction and that settlement time. When you do swipe that card, there's a lot that goes on in the back end for that to happen.
Yeah, and importantly, people don't actually need to hold Bitcoin, right? This is just it zaps in and out of the Bitcoin rail. You don't necessarily need to own Bitcoin to do this. It's just the network, the technology that's being used.
That's exactly right.
Yeah. Well, hey, great. This has been a really good conversation, Ezra. Thanks a lot for joining. We covered a lot of topics here and want to make sure we keep all you updated with that. But again, thanks for joining.
Yeah, it's been a pleasure. Let's do it again.
Great. Now, just in closing here too, I want to wrap up. If you have questions on this topic or any others, we're certainly appreciate and welcome any feedback. You can contact me or reach out to your advisor. Thank you.